class from Sasindran. In this video, we will discuss about kinds of taxes. Okay? A tax system may be composed of different kinds or different types, some of which may be progressive tax rates, proportional tax rates, regressive tax rates and digressive tax rates. Okay, now we are going to discuss about progressive system of taxation. Okay, yeah, India, we know on the whole, India follows the principle of progressive system of taxation. Very simple. See, progressive tax rates. Progressive tax rates. A schedule of progressive tax rates is one in which as tax base or income increases, the rate of taxation will also increase. No doubt. The amount of tax payable, that is the amount of tax to be paid, can be easily calculated by multiplying the tax base with the tax rate. Okay, and the concept of progressive tax rates can be easily explained with the help of a table or a schedule and a diagram. Okay, see the schedule. See, first column we explains, see, tax base or income, very simple, income. Second column, tax rate, and third column explains amount of taxation. Amount of taxation. Yes, I told you a schedule of progressive tax rates is one in which as tax base or income increases, rate of taxation will also increase, and the amount of taxation, the amount of tax to be paid is or can be calculated by multiplying tax base with the tax rate. Okay, let's see. Supposing the taxable income of a particular taxpayer is, or a particular individual is equal to 3 lakhs rupees. 3 lakhs rupees. It should be remembered here that in India, as per the latest slab, those who possess annual income worth 2.5 lakhs are exempted from direct tax obligations. Okay, up to 2.5 lakhs are absolutely exempted from direct tax obligations, and those who possess annual income worth more than 2.5 lakhs should be taxed. Yeah, should pay tax to the government. Okay, and supposing a taxpayer having taxable income, see, what I am saying is taxable income we mean. This is not disposable personal income. See, personal income minus personal direct taxes is equal to disposable personal income. See here, taxable income, supposing 3 lakh, that concerned taxpayer has to pay 10% of 3 lakhs rupees as direct taxes to the government, if the government follows the principle of progressive tax rates. This taxpayer has to pay 10% of 3 lakhs, that is, see, 30,000 rupees, right? 30,000 rupees, that is 10 lakh, no, yeah, 3 lakh into 10 divided by 100. This is 10% of 3 lakhs rupees, 30,000 should pay to the government as direct taxes. Our point here is, as and when tax base or income increases from 3 lakh to, supposing 5 lakhs, here the rate of taxation will also increase from 10% to 15%. Here this concerned taxpayer has to pay 15% of his taxable income, that is 5 lakhs. See, we get 75,000 as amount of tax. Okay, this amount should be paid by this taxpayer to the government as direct taxes. And And again, further supposing tax base or income increases from 5 lakh to 10 lakhs. 10 lakhs rupees. Here also the rate of taxation will increase from 15 to 20%. The amount of tax payable here can be calculated by multiplying, see, the tax base, say rupees worth 10 lakh with the tax rate, say 20%. If it is so, we get, see, 2 lakhs rupees. 2 lakhs rupees as the amount of tax. This entire amount, 2 lakhs, should be paid, must be paid by this taxpayer to the government in the form of personal income tax. Several deductions are made out of it. Okay? Yeah, we should remember it. Okay? Anyhow, see, in this particular context, you must have to know as and when tax base increases, income increases, the rate of taxation will also increase. The amount of tax payable is or can be easily calculated by multiplying tax base with the tax rate. This is the so-called progressive system of taxation. Okay, this schedule, this typical schedule can be easily converted into the form of a diagram. Okay, see the diagram, right? Okay, in this diagram, x-axis measures income of the taxpayer, taxable income, income or tax base, tax base. Okay, as per the schedule, see 3 lakhs, then 5 lakhs, lastly 10 lakhs. Yes. And y-axis shows tax rates. Tax rate. As per the schedule, 10%, 15%, 20%. See, we all know that if the government follows the principle of progressive tax rates, when income of the taxpayer increases, see, tax rate will also increase. That is, those who possess more and more taxable income should contribute more and more amount of tax to the government as personal income tax. See a curve representing or the upward sloping line representing progressive tax rates has been drawn gradually upwards from left to right, indicating that, see, if the taxable income is equal to 3 lakhs, the concerned taxpayer has to pay 10% of the 3 lakhs rupees. And when taxable income increases from 3 to 5, rate of taxation will also increase from 10 to 15. See, 10 to 15. Yeah. Again, likewise, taxable income increases from 5 to 10 lakhs. Rate of tax will also increase from 15 to 20%. 20%. Okay? Yes. This is the upward sloping line representing progressive tax rates. Okay? Progressive tax rates. Yeah. Very simple to be studied. Once again, a schedule of progressive tax rates is one in which when income increases or tax base increases, the rate of taxation will also increase. The amount of tax payable is calculated easily by multiplying tax base with the tax rate. The concept of progressive tax rates can be easily explained with the help of a schedule and a diagram. See, There are three columns in the schedule. First column explains the tax base or income of the taxpayer. Second column tax rate, and third column the amount of tax to be paid by the taxpayer to the government. That so-called schedule can be easily converted into the form of this diagram. In this diagram, x-axis represents income or tax base, y-axis tax rate. We know as and when tax base increases, rate of taxation will also increase. Okay, based on this tax base and tax rate, we can have an upward sloping line. That is what is called the progressive tax rates. Okay, the upward sloping curve represents, as and when, or those people possessing more and more taxable income should contribute more and more amount of money to the government in the form of personal income tax. Okay, again I mentioned India on the whole follows the principle of progressive tax rates, and the progressive tax rates has been justified on many grounds. First of all, progressive tax rates has been justified on the ground that it serves as a best weapon, best instrument to reducing the existing inequalities in the distribution of income and wealth. Because those who possess higher income should be taxed, okay, more amount to the government than those who possess lower incomes. Okay, and see, the progressive taxation is economical because, see, the cost of collection of tax does not increase with the increase in the amount of revenue. Very simple. Therefore, this is very desirable to the government to be followed in order to reduce the existing inequalities in the distribution of income and wealth. In short, if the government follows the progressive system of taxation, the tax burden falls more heavily upon the richer sections of the community than the poor sections. Or, in other words, the poorer sections are absolutely exempted from direct tax obligations if the government follows the progressive system of taxes. Okay, I think you like this video. Please don't forget to subscribe my channel. Give me a big thumbs up. Okay, study thoroughly. Thank you.